All right, let's get straight to it. If you're a founder, a CEO, or a principal in your field, you're here for one reason. You're used to winning. You make the right calls, you execute, and you correctly attribute that success to your skill. But what if I told you that the very winner's mindset that got you here is the exact thing that's quietly costing you a fortune in the market?
I want you to be honest with yourself just for a second. Think about your last really great trade. You felt like a genius, right? Knew exactly what you were doing. Now, think about your last big loss. Was that the market's fault? Some random news event? An unpredictable move? How you answer that question? Well, it's everything. Okay, let's really dig into this. It's almost like you're operating with two completely different brains. See, you have one brain that explains your wins and a totally separate one that explains away your losses. And this little internal division, it reveals a deep, costly cognitive flaw that, yeah, protects our ego, but it absolutely destroys our trading accounts.
And this starts really early on. I mean, think way back to school. When you ace an exam, of course, it was because you were smart, you studied hard, but when you failed, oh, well, the test was unfair, the questions were tricky, the teacher didn't explain it right. Sound familiar? It's a fundamental human instinct.
And this way of thinking, it follows us right into our professional lives. You see it everywhere. A CEO takes all the credit for a fantastic quarter, but blames a bad one on market conditions. A coach, well, he's a tactical genius after a win, but points the finger at a bad call from the ref after a loss. It's the exact same pattern, playing out in every single high-stakes field.
So, let's actually put a name to this thing, because this isn't just some personality quirk. No, this is a specific, well-documented, operational flaw in your decision-making process. And we call it the ego trap.
The formal term for this is self-attribution bias. Simply put, you internalize success as proof of your skill, and you externalize failure, pushing it off on chance or outside forces. In trading, that combination is absolutely catastrophic.
Now, I know what you might be thinking. Okay, sure, that's for amateurs. Professionals, we're immune to this. Well, you might want to see what the data has to say about that. The story it tells is very different.
Researchers conducted this massive study, digging into the shareholder reports from nearly 2,000 different funds. They weren't looking at the numbers, they were looking at the language the fund managers used to explain their performance. Did they credit their own skill, or did they blame the environment?
The results were staggering. When these professional fund managers had a winning streak, look at this, almost 60% of the time, they pointed inward. It was their stock selection, their brilliant strategy, in other words, their skill. But here's the kicker. Look what happens when they lose. Suddenly, it's not their fault anymore. An overwhelming 83% of the time, they blame their failures on external factors. The economy, market conditions, bad luck. They take all the credit, but they refuse to take the blame. Even the pros are caught deep, deep in the ego trap.
So, if the so-called professionals are this deluded, what in the world do you think this bias is doing to your bottom line? This isn't just some academic thought exercise. This bias is an active, live threat to your capital, and it attacks your account in very specific ways.
See, this bias unleashes what I call the 4 horsemen of account destruction, and they create a death spiral. First comes the overconfidence from taking credit for every random win. That leads directly to excessive risk-taking. But because you blame your losses on bad luck, you never actually learn from them, which guarantees repetitive mistakes. And that lethal combination? It's the engine of chronic, poor performance.
And here's the most dangerous part of it all. This self-attribution bias creates a feedback loop of pure delusion. It literally prevents you from seeing what's wrong with your process. Think about it. You can't fix a mistake you don't even believe you made. So it locks you into this cycle of failure, all while your ego is whispering in your ear that you're a genius who just got unlucky again.
Okay, so we've identified the problem, we see its devastating consequences. So what's the solution? Well, it's not about trying to think differently or just suppress your ego. It's about building a system, a structured process that makes your ego totally irrelevant to the outcome.
At STOA, we call this the antidote protocol, and it's built on 3 non-negotiable steps. Number 1, you maintain a rigorous trading journal. This forces you to confront the cold, hard reality of what happened, not your feelings about it. 2, you seek objective, data-driven feedback. This breaks the echo chamber of your own bias. And 3, you set goals based on the flawless execution of your process, not your P&L. This detaches your ego from the random outcome of any single trade.
You have to remember this. The market is a completely objective force. It doesn't know who you are, it doesn't care about your past successes, and it certainly does not care about your ego. The only thing that can protect you and allow you to grow is a documented, repeatable, and objective process. That is your only defense out there.
If you've made it this far, you're not just curious, you're serious. And that's exactly who STOA was built for.
Here's the deal. We don't accept everyone. We run on an application-only system because we only work with people who are ready to operate at the next level.
So, if you want to stop wasting hours chasing noise and instead run a proven, documented process that gets results in less than 90 minutes a day, apply now.
There are limited seats, and once they're filled, they're gone for the quarter.
Click the link in the description, fill out this short application, and let's see if you're a fit. If you're watching this, my guess is you already know you should.